Hey guys, Tony here. How you doing? I did want to give you guys a quick um, breakout strategy play, possibly for Friday. Equifax obviously looks like it's breaking relative highs. The candle is exactly what we're looking for on the weekly side. It's a bullish candle, and it's already over the relative highs. Again, this is something that I would only play on Friday. We need to make sure that the candle close is actually above previous relative highs. Looking at previous breaks, we can actually see that it tends to break on the upside and then kind of sort of do a very slow trickle to the upside. So I'd say possibly for this I would play it more conservative. I would think that 953 is possible, maybe about a month and a half out. I would probably do minimum 6 month out, sorry, 6 month out, 6 week out calls. Or you guys know that for the breakout strategy, I'm actually getting completely rid of options and I'm actually sticking to shares. So in a case like this, I would set a stop loss at the previous fib, which would be 789.53. The actual buy-in would be somewhere around this area. So let's say the candle stays in this what is it called? Let's say the candle actually stays here around this 868 area, around this area. So your buying would be here, and then your first take profit would be that 953. So I would sell, for example, 80% of my position at 953. Out of that 80, the rest of the 20% that I have left, I would sell 10% at 1,001 or $1,000, and the rest of it I would just kind of let it ride to see what happens. Keep in mind, let me see what the actual percentage gain would be here. So for your first TP, you are looking at roughly maybe like a 9-10% gain. So this on shares would actually only net you about 9-10% gain. On options, you're looking at a closer gain of anywhere between 80 to 100% if these options actually hit within your time frame, right? The general consensus here is that if an option or if a ticker of a company goes up 10%, you can roughly expect anywhere between 80 to 100% gain from that 10% move up, right? If you actually go to the actual fib, you're looking at a 15% gain on the shares, or roughly about 100 to 150% gain on the options. And again, for the last take profit, which is the most risky, you're looking at a full 20% gain on your shares, or roughly anywhere between 50 to and 100 to like 200% gain on the options if you do end up buying them, right? I am actually personally going away from options on the breakout, and I will stick to shares just because I am personally trying to be a little bit more conservative. If you are buying here though, remember that your loss right now is around, you would take a 9% loss. So if you're buying $100 worth of shares, if it actually hits your stop loss, you're losing around $10, around $9-10 or so. So keep that in mind, that you're risking it. Your risk to ratio essentially is going to be a 1-to-1 with this play, because again, if you're buying from here, you're risking, it's a 1-to-1 play, right? You're basically risking 10% to make 10%, potentially a little bit more at 15, and then again, the most riskiest at 20. But if you do have shares, obviously you can hold out for a lot longer than if you do have options. But if you have options, you can definitely leverage the smaller amount of money that you have to net a bigger profit. I personally would recommend doing shares and waiting it out a little bit, as opposed to actually doing it with options. Even though you can net a much bigger gain, I generally tend to stay away from. Now I will stay away from options just because there's too much of a risk factor, especially with with your lot with not with options that aren't that don't have enough time. So you could potentially see just kind of sideways trading momentum for a while, which is what happened with my breakout strategy on Wing and Shopify. So those are more than likely going to be closing as a full loss. So the breakout, instead of being, I think, 8 to 9, would actually be 8 to 11. So out of 11 trades, 8 of them have actually been very successful. But keep in mind the risk reward. The options can net me a huge loss, Whereas shares, I would basically be breaking even. So that's one of the reasons why I'm switching it up and not doing options anymore, because it just seems a little bit too risky on that end, to have it, to basically have theta decay, right? The closer you get to the actual expiration, you're basically losing money until then. You can actually use a long position setup to set up exactly what you want to take your position and your stop loss, and to set up what your actual risk reward is, right? So here you can see that you have a risk reward of 1. The ratio is 1.04. Ideally, you would want something that's a little bit, that's at least 2. That's a ratio of 2 to 1. So I wouldn't actually have it, I wouldn't actually set it a little bit higher to have it be at least 2 to 1. I think the stop loss here, there's not too much of a wiggle room, and then your previous support would probably be somewhere around like 814.82. So I think at most I'd probably set up my stop loss a little bit lower than what the support is. So I'd probably set it up like maybe like right here. So instead of actually having just a 1-to-1 ratio, I have a risk reward ratio of 1.34, which is a little bit on the riskier side, but again, it's below your previous support, and if that support gets broken, there's like a 99% chance it's going to go back to 789, basically making you lose like an extra, I don't know, like an extra like 1 or 2%. So I would definitely put my stop loss a little bit higher than I would previously. So I would set it up like right here, like maybe $806. But again, Equinox is looking very good. The reverse MACD is currently creating triggers on the bullish side. The daily right now is, the daily is bullish, and then also the monthly is still bullish. Keep in mind it is losing a little bit of bull momentum, but on these bull momentum losses, you guys can see these candles down here, the little darker blood colored ones. Every single time it actually got created, what happened? Equinox just kept moving to the upside. So I would definitely say that I would be 100% bullish on Equinox, especially going to 953 in the coming months. And for this play, because it's a little bit of a steadier and slower mover, I would 100% go with shares just because it's the safer route. You're only gonna make, like I said, around the 9% gain, but it's really just about being consistent, trading consistently, making your money, and if it's not going the way that you want, trying to cap the losses as the least amount of possible that you can lose. Right, the worst thing you can do in trading is take a loss. I always consider either breaking even or some profit a win in my book. But if you take a loss, that's bad, because not only do you got to make up the loss back, you got to make up you got to make the loss back on another trade, go back to your original balance, and then keep going from there. So it's like 3 steps back, right? But again, Equinox, whatever it is, EQIX. I think it's a great setup for the breakout strategy, especially coming into Friday. But again, only trade this on Friday. I don't do any breakout strategies Monday, Tuesday, Wednesday, Thursday. You have to have confirmation that you have some sort of bullish candle actually crossing over the relative high. So this video went on a little bit longer than I would have liked, just because I was going into things a little bit longer. But I will see you guys later. Have a great day, and so long. Bye.